Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys? Welcome back to mentfx, and in this video today, we're going to take a little bit of a break from all the psychological aspects of trading and talking about all the psychological things that you need to be thinking about or considering as you're starting to make a full-time for yourself trading, and instead are going to look at an in-depth approach to a small aspect of the concepts I teach on this channel and how you can begin to look at zones, mitigations in a better light. So overall, this week is shown to you right here in front of my screen. This was Monday right here. This is Tuesday right here. Wednesday, Thursday, and then today is Friday, so there won't be any trading for me. I don't trade Fridays, and I actually really rarely trade. I don't know, yeah, so I just don't trade Fridays. Now I've started to trade a lot of the Asian sessions at the 6 p.m. till around, 7 p.m. till around 1 a.m. New York time. So I'm usually not up too late, but this first day I was up until like 12 trying to get a trade because usually my goal is to hit an entry and then I just kind of take a step back and don't worry about it anymore. So what are we going to look at this week? So as you all know, over the week I've spoken about some of these with you. Remember, all these higher R runs are not just full-on closes at the very lows or anything like that. That's complete bullshit. As we go through the week, and as we hit nice and hard running trades, we hit break evens, we hit partials, we hit multiple partials, we hit partials, and we get stopped at break even, right? Like this right here was actually aiming to take out the liquidity right here. That never took that liquidity and then just stopped at that +5 RR and then hit break even before going a little bit higher. So that happens too. And overall, end of the week, we did deliver to this low, but I was not able to position myself. You can see I had this sell here that was aiming for this low, but that wasn't able to position me well enough to take that all the way down. Instead, I could only take a small partial off it, and then it got stopped out. But that's fine. But what is it that I really want to talk about with you guys today in this specific video? Well, it's the idea of looking at zones. So as you all know, with the release of my 3-step box methodology, and something that I've taught forever on this channel, as you all know, and very quickly, right, that means 1, you have a structural or a story delivery, 2, you have an S&D zone or an area that needs to be mitigated, or an imbalance or an inefficiency that needs to be filled, all concepts taught every single week basically on this channel since inception. And by the way, thank you so much for all your support. You guys have been insane. And 3, your confirmation, which is, oh shit, did I even spell that? Your confirmation, which is almost always going to be in the form of a Wyckoffian accumulation or distribution, a double MB, which is a special exclusive private mentorship setup, a triple M, which is the same thing. Then you have things that are available to you already, like fractal 3-box method setups, or even fractal low time frame structure breaks, right? So this entire week has been mostly on UJ for Forex, that is. I don't trade Forex with ACAP just yet. That's with my actual mentfunding. On mentfunding, I was actually able to catch this US 30 buy, which was phenomenal. It was more with Elliot wave, and I don't have much content on Elliot wave on this channel, with the exception of some of my structure videos. So I'm not going to delve deeper into this, but it's a great start to the start of my evaluation. It's just been one trade. It's right here. So we were able to secure 1.4% on that overall with a 0.5% risk. So that's really nice, and we're closed now because we can't hold over a weekend anyway, so we're done on this day. But overall, what it is I want to talk about today is the actual smart money aspect of getting involved using this 3-box methodology and having a refinement that allows you to know which zone or which best zone is most likely to be hit, right? So as you all understand, what we do in terms of the 3-box methodology, which I will have another video on in the future, is we go and look for, at its simplest form, an impulse of some sort, right, in the form of a blue box, right? So we find the number 1 box, which is our impulse. We make that blue. Then we go ahead and refine a supply zone, in this case because it's a bearish move, right? We have a invalidation point at the high and a target point at the low, right? And again, I'm on a 15-minute chart right now, but you can be on any time frame chart to do this, right? Then you want to go and identify a supply zone. So usually the last up move before a down move, right? So in this case, it could be this up move right here, and you want to make that red. And as you all know, you should be looking for what? using the rule of 30 taught on this channel as well. So everything is given to you guys. You don't have to be part of the private mentorship to get access to anything. There's a lot more exclusivity and content structured step by step in the mentorship, but you do not need it. Use these videos, especially if you can't afford like the mentorship or anything, which I fully understand. You don't need to. So, and you have this distribution in here, right, which is going to appear in the form of what we like to call the green box. So there's going to be the 3-step box methodology applied here, right? But that also means that inside of it, there's going to be fractal 3-box methodology setups. And we're going to talk about this in a future video, not so much right now. But again, just so I can show you guys, there's going to be most likely a distribution in here. And not always will it give you an entry. I've seen a lot of people say stuff like, well, when I look for confirmation, I don't always get an entry. And my response to that is, well, no shit. There's not always going to be an entry at a zone that you're watching, and price isn't always going to get to that zone. And even if it gets to that zone, it's not always going to give you the re-entries off of your confirmation. Part of trading is recognizing that your rules are not always going to be met. And when those rules aren't met, part of your strategy is also allowing that move to leave without you, without being part of that move. And when you can do that consistently and step back from having to jam pack, and FOMO yourself into moves, that's where real profitability comes from. Why? Because you're not forcing anything. And the next time the same 3-box methodology sets up on a 15-minute, a daily chart, an hourly chart, a 1-minute chart, whatever it is, you can be part of that move. So let's look at this one, for example. I haven't looked at this because I didn't trade this one. I traded this sell right here. And we'll look at that in a second. And we'll look at the at the main concept approach that I want to teach you guys today in terms of supply and demand zones and how to refine them. But let's see. So it's a 15-minute chart. Rule of 30 means that we should be on a 30-second chart to confirm this. But because I know that not everybody has the 30-second charts, we are going to look at a 1-minute to make it fair. So, probably even less of a chance that there's an entry. So let's go look at the 1-minute. Some good shit. Good shit. Not sponsored, by the way. Sponsor me, monster. So, clearly, before we tap the zone, there is accumulations and distributions, but we don't really care about them. Refer to my other videos where I talk about the snowflake rule. None of these really matter. Yes, there's distributions in here, but they don't matter. They're not in confluence with a higher time frame area, right? So we don't care about them. Now, the first time we would care about it is when it taps in right here. And clearly we have the transition and the transfer of weak to strong hands. And that weak to strong hand transfer is actually met with large breaks down, right down here, as well as in these areas here. I'm not going to talk about specifically how we view large structural breaks and fractal structural breaks and fractal double MBs and all this stuff on this specific video, because there's a lot of depth to that, especially in the mentorship. By the way, if you want to be part of one of the best mentorships in the entire world, check it out. Always popping, always talking, many people constantly hitting stuff every single day, and a lot of stuff that you can learn from funded members, new members, and people that have been here for a while. So definitely check it out if you want to be a part of that. Otherwise, as always, refer to the videos. So weak to strong hand transfer breaks down in structure. You might have been able to get a sell off of this SND zone right here. So this right here actually counts as its own. I think I used gray, right? So let's go with the gray. No, that's really hard to see. Sorry about that, guys. That's a little bit better. So we're going to talk about why you can use something like this, but you might have been able to catch your sell overall on this right here, right? With your stop loss just above the protected high, as I teach protected highs and protected lows on this channel, as you all know, right? Because this structure broke down, and because that structure broke down from this, that came from this high, which means that even though there's this inside fractal structure here, this is where you're protected under. So you could protect yourself here or with the fractal structure. Both are valid. And then you're going to look to basically target that lower liquidity, which is in the form of this blue box impulse, right? 3-step box strategy. Oh, wow. So in this case, it actually worked perfect. Oh, no, it didn't. Perfect. Okay. Thank God it didn't work perfectly, or else I'd get more scam, or whatever the fuck people like to do. So you see, you'd have your first entry here, and that would begin to run. Maybe you'd get a break even after this break right here, because clearly structure has shifted not just once, but once, twice, 3 times, 4 times, even at this break. So there's a really good chance you would have been break even at that point, and you probably would have been stopped break even here, or if you're someone that holds, you'd be stopped at -1. So that'd be a normal -1. And again, just because we've lost this and structure has now technically shifted to the top side and broke structure, here, in all these areas, it doesn't mean we're bullish. Why? Because that higher time frame bias under the 3-step box methodology is still short, and our invalidation point has still not been tapped, right? Nor has it been traded through with an impulse and momentum, right? Because the way we look for breaks of structure or invalidation are to see price break an area and stay above that area, showing ourselves that order flow has been taken not only above, right, but also has been taken above and remained above, thereby creating new liquidity that needs to be ran on the top side, right? So that's the way we kind of think about this 3-box methodology. If you want to make it if you want to take your own understanding a little bit further from just, oh, I got 3 boxes. But if you just leave your understanding at, oh, 3 boxes, and actually stick to the rules of those 3 boxes with the invalidation points, like this high right here, and the liquidity points, you'll be fine, right? Just go and test it. So we can look for the next Wyckoff setup to go short. Why? Because we're still inside our bias. So again, we have this transfer of weak to strong hands. And that strong hand transfer is met with what? A new break of structure down to the downside, right? With potential runs on higher structure here, and overall target still existing at that blue low right here. So what does that mean? That means that as we break that, once again, where's the last up move that created this down move? Well, it's right here. Whoops. Well, it's right here. What the fuck am I doing? It's right here. Beautiful. Right? Which means what? You can be a seller at the open of it or at the 50% of it, which would be in or around these points here, right? As we've always taught on this channel. Just like that, a very, very simple entry criteria. I don't trade this specific way myself. I trade a very similar way. The 3-box methodology is what I use to get involved myself, but I have different confirmations that I teach specifically in the mentorship and that other people use too, like the Cyber Mike tank strat, which is absolutely amazing and I have a good time with it. I don't use it myself, but other people do. So again, as you catch this down, again, there's no difference here. If you haven't seen my 3-box methodology video yet, just go and watch it. The 3-box strategy is a very simple strategy to follow, but you might not be following what I'm doing on here, right? And why am I looking at the 1-minute chart? Well, because the impulse that we are looking at came from a 15-minute breakdown with an S&D zone on the 15-minute, which means we want to take that short from there, right? And as price got there, what did we notice? We noticed that first tap in with weak to strong hand transfer and look to get into a sell that could have been a break even or a -1. Either way, it happens. You're gonna lose. I'm gonna tell you guys every video now because people like don't think that mentors lose or real people that actually trade. People don't believe that traders actually lose money. What you guys don't know is some of the best traders in the world lose so much money. Oh, I forgot I was in the queue for this. Let's move that to the side. My bad, guys. So yeah, people don't realize that you're actually that good traders are actually losing money normally and consistently because they understand that over time, as I always talk about in this channel, there is going to be that loss, whether it's in the very start of your account or later in your account, is always going to result in an overall gain over enough time, right? This is how profitability is made. And when you repeat this month after month after month, or day after day after day, or year after year after year, over enough time, when you look at that from a zoomed out perspective, as I like to do all the time, well, from the golden goose approach, you're going to see this kind of consistency, right? And what you got to understand is now when you zoom out and see this and you see these little dips, these dips here are actually going to be much bigger dips when you're on an intra-week scale. What do I mean by that? Well, this right here is a year, right? And you've now compounded your account a really, really intense way. What you need to recognize is the inside of what's going on here with these tiny ones that we kind of forgot about a second ago, like these ones here. You're going to experience very, very large and unbeknownst drawdowns for yourself, right? So like you're going to get to this high and this low to get here, right, is going to look like this. It could look like this, right? And this could get scary. But so notice this would be a big period of drawdown or losses, right? That's non-comparable to any of the ones before. And again, this is one of those things that can psychologically mind fuck you if you don't have that that understanding that it is building a longer term model, right? It's building that longer term overall trend that is then going to repick back up. And once again, you're going to have the same ones that you had before, right, occur again, but it's going to then go to make its new high. And again, you're going to then have this longer drawdown period, which you're not used to. But guess what? The next time you have this drawdown period, you're looking at this and you'll go, oh, it's part of that massive correction here. Let me keep executing my strategy, my entry criteria, my edge, and keep growing. And once you get to a point where you understand this at a very, very high level, mentfunding will be there for you. Check out the link at the top. But otherwise, right, let's go back to this idea of how we think about that 3-box methodology. Because again, we did nothing here that I haven't taught on the channel just yet. We are looking at weak to strong hand transfer, inside of our 3-box methodology, or the 3 simple steps of confirmation, which now every single smart money YouTuber has started to teach, which is great because that means you guys are learning it from everywhere. So that's fantastic. Now you guys really know that this is all you really need if you actually stick to it. Now there are some YouTubers that add things to this. Don't worry about that. You don't need that. It's not needed. It's for the purpose of probably marketing. So either way, use this and, learn it from wherever you want. But this is all you need, and go and test it, right? Stop trying to bunny hop strategies. It's not going to work out for you. Bunny hopping has never worked for me. Bunny hopping has probably not worked for you. And there's a good chance that, if you keep hopping around, it's going to take a lot longer than you might want to get to the goals that you've probably set for yourself. So structure, SND, confirm, all viewed in the form of a 3-box methodology on this 15-minute chart. As you can see, boom, bing, bang, boom. And that's how you can enter these. So again, I wasn't up during this time. I was sleeping during this session right here, so I wasn't able to catch this. But this same thing is applicable even where? On the fractal and lower time frames. For instance, you could have been inside of here trading this move upwards on a lower time frame, but we're not going to talk about this right now. This is going to be a time for a new this is going to be a different video that I have a plan for. So let's get rid of these and let's talk about the specific in-depth approach I wanted to give you guys. Or maybe I'll save it for the next video. We'll see. No. Since I was talking about this week's trading, let's talk about this week. So let's get rid of all this inside confirmation. But remember, go back and watch how we looked at this Wyckoff. It'll help you a lot, right? Where am I? I can't see myself even on my own screen. Wait, is my recording software still open? Oh, it is. Okay, what's up, guys? Hey. All right, cool. So let's look at what happened yesterday. So yesterday, you can see, what was I doing? You'll see all these zones I have drawn out. Why do I have them drawn out? Well, because I was following the order flow, or the structural delivery of price, or the smart money structural composite man delivery, right? Whatever it is you want to call it. I don't really care, but it's more so what the order flow is, right? That's what it is. And it was clearly bullish into my market, right? So as you can see, as we came into the start of Asia, I was looking at this box, right? Box methodology, SND zone. You can see I refined to a few zones. And what was I looking for here? For a confirmation to go long. What did we get there? Null, zero, no confirmation. So what happened? I kept looking, right? Again, this is an example of where sometimes if you do want to be someone that sits in front of the charts like me, I love sitting in front of the charts. I have a mentorship. I talk with people every single day. I'm always like live with them and not on video, but I'm always talking to them throughout the day on Discord, always looking at markups. So I love being on the charts. It's a game to me, right? I play League of Legends. I play the Forex market the same way. I smurf in League. I smurf on the market. End of story. We love to do it. So I don't mind sitting in front of my computer. But again, if you're someone that doesn't want to sit in front of your computer 24/7, well, you have the exact same approach that you can use on a higher time frame. How so? Just to give you a little bit of an idea, right? There's going to be times where this doesn't work, by the way. It's clear that not always will what we do work 24/7, but that's why I like the lower time frames. If someone doesn't want to do that or has less time, right, you can look at stuff like this. I'm not going to show you every example here. There's no point for that, and I'm going to be doing that for the mentorship, but follow along with this price, right? You have some kind of impulse that is built up. That is your first box, blue box, right? You have a SND zone left behind, the last down move before an up move. That is what? Your second box, which again, you can refine, but we're not going to look at that right now. 3, what do you know is going to happen? There should be a Wyckoff setup or some kind of confirmation setup as taught in the private mentfx mentorship inside of this zone here that will confirm for you and give you a reasoning to go long, right? So is there one? Well, we're on a 4-hour chart. So what does that mean? That means that we can potentially look at a 4 times 60 at a 8-minute chart, so maybe a 10-minute. So since people don't pay for TradingView, let's do a 15-minute chart. So there should be a 15-minute Wyckoff setup in here on average, 15 or 5-minute, basically, right? So let's go to a 15-minute chart and let's take a look inside of that area, right? And just taking a look at this, it looks like there would have just been a loss, not even a win. But like you can see this, actually maybe it was a break even. So you can again see weak. I'm not gonna label everything, but weak to strong hand transfer. Strong hand picks up all the weak hands. That's the run of liquidity. Why are we calling it weak hands? Well, weak hands is the equivalent of setting up many equal lows, or setting up a sort of megaphone pattern or fan pattern, or setting up multiple structural points for the future, or setting up a channel, right? What's happening is weak hands are getting transferred and taken out of the market because they're unsure of what's going to happen. Those weak hands are being absorbed by strong hands, aka the composite man, smart money, institutions, major institutions. And how is it that they're absorbing these people on these lower time frames? Well, it's a 15 minutes, so it's not that low, but because they're positioning themselves multiple times throughout a market, not just once, right? They don't just take one buy or one sell and just kind of hold. It's not how it works, especially if you're a very, very large fund. Instead, you have long-term targets on dailies, weeklies, monthlies, whatever it might be, and you look for a way to constantly get yourself in and out of positions by way of grabbing and taking liquidity constantly on the back and forth front, because you're trading much higher lots, and you're doing that by taking out these weak-handed people, which again, they're not looking at charts going, oh shit, look at that fucking swing low. You see that swing low? Oh, let's take out that swing low. That's not what they're sitting there thinking, right? What they have is they have order books in front of them, and those order books are showing them where volume comes into the market. And guess what? That volume that comes into the market, the areas where people are interested in buying and selling and all this other fun stuff, is in areas that people are used to seeing and are psychologically active by seeing, which ends up being what? Support and resistance, channels, patterns that people think they are recognizing and are looking to emotionally get involved on them. And this is a constant give and take, and has been the give and take for hundreds of years, even before the markets existed. When they used to trade kettle and corn, this is the same way people thought without even knowing there were charts, right? Take me back to the medieval ages, or back to the ages where people still only had like horses and shit, and I will be the richest person there. Why? Because I will start to chart the price of corn and how it's traded, or the price of silk, and begin to do my little voodoo magic of Wyckoff on the back end using my stones and writing in hieroglyphics and going, oh, it's testing a demand zone. This is where it's going to be demanded. And because of psychology, that's where it will be demanded. And because of that, I'll become the richest in the kingdom, and then I'll be killed by one of the higher end nobles because they think I'm a scammer and I'm scamming people, right? Fun stuff. I'm happy I live in this time then. So again, weak to strong hand transfers going on here, and those orders are being absorbed by the smart money. And after that, we have this structural shift inside, and we have this larger structural shift on the top side, which means we can be buyers at any of the areas in here. And again, because I don't trade the specific way, you can just say, for instance, the last down move, which is this one right here, could be an area where you're a buyer at, right? I'm not going to dive into specific confirmations now because it's not the mentorship, and that's not what I do here. But again, more than enough is available to you in my mentorship. And you can look to take this to where? The blue impulsed liquidity up here, right? But what does that also mean? That means you need to be ready to break even. And guess what? After this break of structure right here, the second we break that, we know that there's no point to come back down here, because then it would be breaking new structure to the downside. So what does that mean? We could be locked in a break even. So even though this trade did not work out using the 3-box methodology, it is a break even and not a loss. And then again, you have a new weak to strong hand transfer. That strong hand picks up all those weak hands all the way throughout, right? And does what? Break structure to the top side. What does that mean you can do? You can be a buyer down here, right? You can begin to be a buyer on these lower time frame shifts, which we're not going to talk about again, but a buyer in any one of these points. And as you're doing that, maybe you split risk on both areas. And as you're doing that, this is just an S&D 2.0, something I also teach on this channel. So check that out, right? All this information is available to you for free. And again, if you want a better and more concise, structured version of every single concept provided on this YouTube channel, given to you in a very refined and delivered way, especially tailored to you directly, definitely consider joining the mentorship. And again, it's $100 a month. If you hate it, feel free to leave after the first month, right? That it happens. Some people don't like it. But if you love it, well, you're going to really like it, and you're going to be on for a long time, hopefully, right? And then you can go get funded with mentfunding. Check the link at the top, and at the bottom, everything is the ecosystem. Now, where's your target? Well, let's keep it simple. Up here, right? And as you take your targets out, that's how you secure your positions, right? And this one never gets hit, and that's fine. And the whole thing is canceled, right? So that's how you can approach this 3-box methodology no matter what time frame you're on, right? Whether you're someone that wants to be in front of the charts 24/7, like me, or someone that doesn't want to be on the charts and wants to be just looking at the market every so often, like not checking it that much. Maybe you have a job, maybe you have something else on the side. Maybe you run a business and you just want to do this for extra income on the side. And again, not financial advice. All right. Then you can be on these higher timeframes. And guess what? They function the exact same way as any of the lower timeframes. Notice this 3-box setup. Blue box impulse, red box S&D, right? Zone, POI, AOI, fucking whatever anybody else calls it. I don't care. Don't think about it too much. Wyckoff, confirmation, inducement, weak to strong hand. Whatever people want to call it, it doesn't matter. Look for the telltale signs taught on this channel, and you will see all this delivered to you in the specific fractal box setup across every single time frame. And guess what? You're not always going to get the setup. You're not always going to get the pullback. You're not always going to get the re-entry. And you're not always going to win. But guess what? If you can allow those 4 things to happen and allow your wins to then run and manage those wins, you guys will put yourself in a very, very good position is all I'm going to say. Okay? So let's delete all this right here. That's no need. So again, that was a daily chart. Remember, that was a daily chart. Actually, no, that was a 4-hour chart. So that was a 4-hour chart. Again, daily, if you wanted to, the exact same thing is prevalent, right? It doesn't matter what time frame we're on. You guys have to stop thinking it matters about the time frame. And again, there's going to be times where price runs and doesn't give you the pullbacks into your deeper demands. But there's also going to be times where price runs, creates your what? Blue impulse, your what? Your red supply or demand zone. Red. And what's going to be inside here? I mean, we don't even have to do this anymore. I'm sure you guys understand it all. Wyckoff confirmation or any other the other confirmations taught. Where? In the private mentorship available at the link below. And how does this confirmation look? Well, if you're someone that doesn't know how to work with fractals just yet and needs timeframes to understand which timeframes can I look at, well, if you're someone that trades a daily chart, right? How much is a day? It's about what? 24 hours, right? 24 hours. What's that times 60? Whoops, 24 times 60. So it's about 1440 minutes divided by the rule of 30. So you need to look at a 48-minute chart to confirm this. What is that equivalent to? About an hour. Okay, so you can literally, if you're using a daily chart, you can look for a 1-hour confirmation, which is actually very easy to do. And again, you could even look at a 4-hour if it helps you. But check this out. I don't know if there is an entry here. I just found this randomly, but let's look. Phenomenal. What do you have? Price doesn't tap in until here. And what do you have when it taps in? Weak, in the form of all this liquidity, trend lines, whatever you want to call it, doesn't matter. Support, resistance, break and retest, blah, 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 liquidity. Weak to strong hand transfer, structural shifts. Those structural shifts happen from where? The last down moves to the up moves, which are defined by what? These points right here, okay? And how can you see that zone better? How do you redefine or see that zone in a better light? Well, let's go, not red, sorry. Let's go gray. Right, you can go a little bit higher on a time frame to find where that last impulse comes from. Where's it coming from? Oh, interesting. Okay, it could be coming from there. Let's go to a 4 hours fair because you guys are on 4-hour charts. So let's look inside of there now to see if there's a nice entry confirmation off a nice demand zone. Where could that demand be trapped in terms of volume, right? Let's go to 4 hours here. Oh, what the fuck do you know? Here's a 4-hour zone, the last down move before the up move, right? Remember, this is from a fractalized entry on the lower time frame, showing you there was a shift, and now you're looking between time frames to see where that came from. Well, it's this last down move, or you can refine that to where? This last down move, in that case, you would miss the trade, and that happens when you refine, or you could keep it to this one, or maybe even play with another time frame, and you'll see there's a very nice zone here. And that could be, for instance, the zone you choose to buy because all of the volume that put in this bullish intent came from that point. And I'm going to talk about that in a future video, so stay tuned. But that's what you're looking for, and your overall targets are where? This next blue high, which is again set on that what? The daily time frames impulse. And what does that mean? Well, based on your own management, you take off most here, right? Leave 20% to run or less, doesn't matter, right? And what does the rest do, especially if you're on a daily chart? Well, now you can literally sit back. Holy shit, right? You can now sit back. This is a 1 to 53 off a daily charts 3-box setup. You can sit back now for, how long was this? 240 days. So you can sit back for almost a year after getting yourself involved and positioned into this trade, right? And maybe partial along the way. So maybe not partial, but trail, trail. Maybe your trail to here now, just like that. And you could just be sitting here. That's it. And your year is complete, right? And if it keeps running, if it just wants to keep going, which by the way, I, as mentfx, never know if it's going to keep going higher or keep going lower. All I know is where liquidity lies and where it's most likely to reach up to. But what does that mean? That means I can position myself using the 3-box methodology all over the place and then look to take price to those levels. So you can keep letting this run, or right, you could get yourself out at these highs or all these highs right here, and that could be your first partial or your first take profit after leaving some to run on, right? This is how you want to think about the market. You're not always going to get pullbacks. It's not going to happen. It's just not, right? So either wait for those pullbacks, wait for your entries, and if you're on a higher time frame, you're going to be waiting longer, right? There's going to be some point of waiting. Or if you're on a lower time frame, as I like to trade, well, what does that mean? That means there's going to be the same amount right? The same amount of failed structural points, of structural points that don't get all the way back up to a certain area of supply that you might have had, right? Doesn't always get there. That happens. I wanted to sell this, but it never got there, so I didn't look at it, right? You're going to have new ones that never get a pullback. You're going to see price keep going. Then you're going to get those pullbacks and you're going to position yourself. And as you position yourself, you're going to look to do what? Trade that to a higher time frame point of interest. That is how I get these much larger RRs. And right, even if this just ran, that's a 1 to 44 off the bat. And again, I get on here, I go, hey guys, hit a 1 to 50. Fucking scammer, you know, or whatever the fun stuff is. But I mean, I'm sure if you've paid attention to my content, you know, and you've tested and you've seen that this happens day after day after day on every single time frame, on every single market. And yes, including crypto, including indices, including the Indian stock market, including the Swedish stock market, including the planetary Mars stock market. It doesn't matter. If there is price and it is being demanded or supplied at certain levels by anyone, you're going to see these characteristics developed. And as long as you understand how to get yourself involved with the proper confirmation under the proper rule-defined bias, perspective-based, you can breed profitability. Perspective. Do not sue me. This is not financial advice. Thank you so much, and I'll see you guys in the next video. All right, peace.